deal sourcing, prospecting of off-market opportunities, as a broker, you have the inside scoop. What's the prospecting blueprint in terms of high performing as a high performing broker? Don't
Yes.
just wait to lease they create them. What's your day-to-day prospecting engine like? Uh, how do you source off market for hospitality and even the some other asset class that you've done in the past and currently looking out for right now?
Yeah, I just pray. It's just joking. I do pray, but no, that was just a joke. So, you know, people think brokerage is about selling, right, or buying.
Okay.
I feel like brokerage is about serving, right?
Mm,
We prospect every single day. And so we call owners, we follow up, we return phone calls. It's crazy. A lot of owners will call us and say, I've left so many phone calls for people, they just don't return my call. Brokers don't return calls. It's crazy. I mean, that's the low-hanging fruit, that us brokers have. We return
yeah.
phone calls. We review maturing loans that are happening in the market. We are talking to lenders. We are meeting operators. We are studying the market. And so as a broker, I think it's very, very important for us to be informed on what's going on around us. And
Yeah.
so most deals aren't, they're not lost because someone else was smarter. They're lost because somebody didn't follow up. So consistency every single time beats intensity, right?
Mm,
Right.
mm.
You
Oh,
got to
wow.
be consistent. Consistency beats intensity, and that's something that I've learned from a lot of our peers that are out there. We're just doing what works at the end of the day. Most brokerage isn't about finding deals.
Mm,
It's studying and staying and having enough conversations, and when the timing is right, people will think of you at that point.
wow. Wow. Intensity. You said, it's consistency beats intensity.
Absolutely. That's one of our advisors that had told me that a long time ago. We follow it to the T, right? We got to be consistent. We got to be consistent. We got to be, and that means what? Follow up,
Follow up there.
mindset, talking to people, and one day, because you're top of mind, as you're
Yeah.
top of mind, and as you're disciplined, when
Hmm.
somebody wants to do something, either on the buying side or on the selling side, they will think of you at that point.
Awesome. Awesome. Yeah. You can't beat that. So converting cold outreach to closed deals, cold outreach in commercial real estate can be a tough grind. You talked about intensity right now. I mean, consistency. How do you break through the noise in the high net worth property owners and institutional sellers?
So we don't really look at this as cold calling. We look at this as market intelligence. But that's what we're
Mm,
delivering. That's what we're
mm,
giving. If you are a broker and if you know what's happening in your market, if you know what's happening in your area where you're at, because things are different, right? Where I am at in
mm.
San Antonio and where you're
Yeah.
at in Dallas, even though we're
Hmm.
in Texas, different
Yeah.
markets. What about
Absolutely.
from Texas versus Florida or Texas versus California
Yeah.
or others, right? So you got to be an expert and you got to deliver that market intelligence to people. So when we call owners, we're just calling to listen, right? We're calling to share what's sold nearby. We're calling and letting them know what lenders are telling us at a given time. We're telling them what cap rates are doing in their market. We're telling them who's buying, who's exiting,
Hmm.
what owners appreciate information. So if you consistently leave people, right, with some market knowledge and make them smarter
Yeah.
on that every conversation, as I said earlier, eventually when they need to do something, they will think of you. And so for us, it's not about getting that listing or selling a property or buying a property. It's creating that relationship with them.
Relationships. Awesome. So relationship leads to the confirmation of you getting the deal when it's the time is due. That's
Correct.
that's that's awesome.
Correct.
So when you consider sellers versus buyers in 2026, when disposing of assets in your market or any other market that you guys are bullish on right now? What strategies are you using to align price expectations between motivated sellers or sometimes even realistic buyers also too? Oh,
Yeah, man. I mean, this is an age old phenomena, right? Buyers are here and sellers are here, right? It's always the case. Doesn't matter where this market is. And the hardest part is bridging that expectation.
yeah,
As a broker, right? As a broker, I can't be taking one corner or one side, right? I have to understand really what the buyer's need is and what the seller's need is, and
hmm,
bridging that expectation. Many sellers still remember 2021, right after COVID, and
hmm,
2022 when the market shot like a hockey stick, right?
yeah,
And so that's what the pricing is in their mind. And most buyers today are underwriting with 2026 realities right now. And you look at the realities right now, your interest rates are high, your taxes are high, your insurance is high. Maybe in
yeah,
our world on the hotel side, the ADR growth is not there. Occupancy is not growing as much, right? More
yeah,
competition maybe is coming, right? So for us, it is looking at and understanding the data. And I tell the sellers that, price your property where buyers are today, not where the market used to be, because that's what most people think when they look at that. Because obviously you may and the seller may end up just owning their own property or buying their own property because they may
yeah,
stay in the market much longer and they don't have a choice but to keep the property. And
yeah,
then they may have risks and all that stuff, right? So you have to price it accordingly. And for buyers, I encourage them that don't just look at the numbers, also look at maybe management improvements, what can they bring to the table? Can they grow that ADR? Can they grow that, or can they reduce that expenses, right? So not only
yeah,
is the NOI going to, is the revenue going up, but can they reduce that expense? And a lot of times we're seeing in the market that when our owners, especially folks that have 5 to 10 properties, when they take over an institutionally owned property, and when they're managing it through their own management company or in-house they're managing it, they can generally reduce a lot of those costs because there's some costs that are in the P&L for this bigger management companies that obviously they have layers and layers of employees and other things that they can shave off at that point, right? So we're just
mhm,
always looking to see, because today's discount can become tomorrow's equity for the buyers. So when we
absolutely.
when we talk to the buyers, we just say, look, yes, understand what's going on in the market today in that property that you're looking at and the numbers, but don't
Yeah.
discount what you can do. And then maybe we can bridge that gap a little bit where the seller's at and where the buyer's at.